The global trade landscape was shaken on April 11, 2025 when China announced a significant escalation in its ongoing trade war with the United States. Beijing unveiled a new round of tariffs on U.S. goods, raising existing rates to a staggering 125%. This move, which sent shockwaves through international markets, was a direct response to President Trump's decision earlier that week to increase tariffs on Chinese imports to a minimum of 145%. The stage was set for a high-stakes economic standoff between the world's two largest economies, leaving businesses and policymakers alike scrambling to assess the potential fallout. The Trump administration's decision to hike tariffs was the latest salvo in a trade war that had been simmering for years. Citing concerns over unfair trade practices, intellectual property theft, and a desire to protect American jobs, President Trump had initially imposed tariffs on billions of dollars worth of Chinese goods in 2018. China retaliated with tariffs of its own, and the two sides have been locked in a tit-for-tat trade battle ever since. The latest round of tariff increases marked a significant escalation in the trade war, with both sides seemingly digging in their heels. The Trump administration argued that the tariffs were necessary to force China to the negotiating table and address long-standing trade imbalances. However, critics argued that the tariffs would harm American businesses and consumers, raise prices, and damage the global economy. As the trade war escalated, businesses and consumers on both sides of the Pacific braced for the impact. American companies with operations in China faced higher costs and uncertainty, while Chinese companies that relied on exports to the United States faced the prospect of losing market share. The tariffs threatened to disrupt global supply chains, raise prices for consumers, and dampen economic growth worldwide. China's decision to impose 125% tariffs on a wide range of U.S. goods sent shockwaves through the global economy. The move was widely seen as a bold and calculated response to the Trump administration's aggressive trade policies. The tariffs, which targeted key American exports such as agricultural products, automobiles, and chemicals, were designed to inflict maximum economic pain on the United States while minimizing the damage to China's own economy. The Chinese government defended its actions, arguing that it was simply responding in kind to the United States' protectionist measures. In a statement, China's Ministry of Commerce accused the United States of unilateralism and trade bullying and vowed to take all necessary measures to protect its interests. Beijing's message was clear. China would not back down in the face of American pressure and was prepared to weather a protracted trade war. The 125% tariffs were widely seen as a sign that China was prepared to play hardball in the trade negotiations. By targeting key American exports, China was aiming to put pressure on President Trump to back down from his demands. The tariffs also sent a signal to the rest of the world that China was willing to defend its interests, even if it meant risking further escalation in the trade war. The impact of the tariffs was felt immediately in both countries. American farmers who had already been struggling with low commodity prices and the loss of Chinese markets were particularly hard hit. The tariffs also raised prices for American consumers on a wide range of goods, from washing machines to iPhones. In China, the tariffs led to job losses in export-oriented industries and contributed to a slowdown in economic growth. From Beijing's perspective, the decision to impose 125% tariffs was not taken lightly. Chinese officials viewed it as a necessary act of self-defense against what they perceived as a deliberate and hostile attempt by the United States to contain China's rise. The tariffs, they argued, were a proportionate response to the Trump administration's aggressive trade policies and a clear signal that China would not be bullied. China's official statements emphasized the need for dialogue and negotiation to resolve the trade dispute. However, they also stressed that any talks must be based on mutual respect and equality. China, they insisted, would not make concessions under duress or compromise its core interests. Beijing's message was a delicate balancing act, a firm stance against what it perceived as American aggression, coupled with an overture for dialogue on its own terms. Beyond the official pronouncements, there was a sense of frustration and anger among Chinese policymakers at what they saw as American hypocrisy. They pointed to the United States' own history of protectionist policies and its willingness to use its economic might to advance its geopolitical interests. The trade war, they argued, was not really about trade deficits or intellectual property theft, but about containing China's rise and maintaining American hegemony. Chinese officials also expressed concerns about the impact of the trade war on the global economy. They argued that the tariffs were harming businesses and consumers on both sides of the Pacific and undermining the rules-based trading system that had underpinned global prosperity for decades. China, they insisted, was committed to free trade and open markets, but it would not stand idly by while the United States engaged in what it saw as economic warfare. The trade war between the United States and China quickly escalated into a diplomatic standoff, with both sides digging in their heels and refusing to back down. President Trump, known for his art-of-the-deal approach, seemed to believe that he could pressure China into making concessions by imposing tariffs and threatening further escalation. However, China, with its long history and deep sense of national pride, proved to be a much more formidable opponent than Trump may have anticipated. The Trump administration insisted that China must initiate negotiations and make significant concessions on key issues, such as intellectual property protection, forced technology transfer, and market access for American companies. They argued that China had benefited unfairly from the global trading system for too long and that it was time for Beijing to play by the rules. China, however, refused to be seen as bowing to American pressure. Beijing argued that it was willing to negotiate, but only on the basis of mutual respect and equality. Chinese officials insisted that they would not be dictated to by the United States, and that any agreement must address the concerns of both sides. They also pointed out that China had already made significant concessions in previous trade talks, only to see the United States move the goalposts. The standoff was further complicated by the deep mistrust that had developed between the two governments. The Trump administration viewed China as a strategic competitor and a threat to American interests, while Beijing saw the United States as attempting to contain its rise and maintain its global dominance. This lack of trust made it difficult to find common ground and reach a negotiated settlement. The trade war between the United States and China sent shockwaves through the global economy, with both countries and the rest of the world feeling the impact. In the United States, the tariffs led to higher prices for consumers, job losses in manufacturing and agriculture, and uncertainty for businesses that relied on Chinese imports or exports. The stock market experienced significant volatility, reflecting investor concerns about the escalating trade tensions and their potential impact on corporate profits. In China, the trade war exacerbated an already slowing economy, as businesses grappled with higher tariffs, disrupted supply chains, and weakening demand from the United States, a key export market. The Chinese government responded with stimulus measures to bolster its economy, including tax cuts and infrastructure spending. However, the trade war cast a long shadow over China's economic outlook, raising concerns about the country's long-term growth prospects. The trade war also had significant implications for the global economy. The International Monetary Fund, or IMF, warned that the tariffs were harming global growth, disrupting supply chains, and fueling uncertainty. The IMF urged the United States and China to resolve their differences through dialogue and negotiation, warning that a protracted trade war would have far-reaching negative consequences for the global economy. The trade war highlighted the interconnectedness of the global economy and the risks of protectionist policies. As the world's two largest economies, the United States and China play a critical role in global trade and finance. Their trade war threatened to undermine the rules-based trading system that had underpinned global prosperity for decades and raised fears of a slide towards protectionism and a fragmentation of the global economy.